right, greetings, listeners, and thank you for joining us on Making the Mark today. I'm your host, Mark McKern, and today we'd like to welcome a very special guest, Mark Weech. Welcome to the show, Mark.
Thank you. Glad to be
All
here.
right. Great to have you. Um, for all you Mark Wahlberg fans out there, we got a little Marky Mark going on.
And the Funky Bunch, even.
That's right. Some listeners may not even know
what that means. Yeah. So,
yeah. Well, anyways, enough for my humor for the day. So, Mark, we're happy to have you with us. Mark is the founder and managing partner of Weech Financial, and which he launched back in 2007. So, before we get started, Mark, how about a little bit of background on yourself and your company?
Sure. So, as he said, my name is Mark Weech. I've been in public accounting since the mid-'90s when I came out of college. ASU, go Sun Devils. Sorry for the U of A fans out there. And then I've been in public accounting ever since. As he said, I started Weech Financial back in 2007. And that is the entity that we've been operating under since then. We started fairly small back then as far as the staff size, and we've been growing ever since. We started in 2007, which if you do the math there, we survived the financial downturn of 2008 and 2009. In fact, we had our best years in 2008 and 2009, and it was a delayed reaction for us as far as feeling the effects of that. But 2011 is where we hit our low revenue point, and we've been on an upward swing ever since. So I can't complain on that. Today, Weech Financial, we're a full-service public accounting firm. We offer all types of income tax preparation, whether it be individual, partnership, S Corp, C Corp, and also for estates and trusts and so forth. We do all those types of income tax returns. We also offer full-service bookkeeping services, and which includes sales tax filings when necessary, payroll tax filings, and so forth and so on. We do a lot of consulting with our clients, especially business owners, to help them structure their entity and so forth the most efficient way so they can save on taxes and other matters, and also, do the obvious, which is the tax returns that go along with it. Tax returns is just the end product. My favorite part of my job is the tax planning and financial planning that we do with our clients to help them improve their bottom line with their business. And so Weech Financial, we're on Power Road and between Elliott and Warner on Mesa, Arizona, and we have clients all over the United States.
Great, Mark. Thank you very much for that overview. And that's he's down on South Power near the 202.
Correct.
A few trips down there over the course of the last few years. So, Mark, you were in the throes of tax season when COVID-19 hit. So, part of me is thinking there was a little bit of relief because you bought some time with the filings being pushed off, but it opened up a lot of other things and challenges, I'm sure, not only with the preparation you were doing, but with the delayed filing and that impact on your business and your preparation for the 2020 season. And then also with all the initiatives from the Small Business Administration to help those that were impacted by COVID-19, whether that's the payroll protection program or the economic injury disaster loan program. Lots of things going on, lots of implications for your line of work. How about we start with the taxes? Let's talk about impact on the business owners that you support for 2019 filing.
Okay. So yeah, as you alluded to, this was the strangest tax season I've had in my career. It was normal up until mid-March when everything broke with COVID-19 and what that did to tax filing deadlines, et cetera, et cetera. Just as a little bit of backdrop there before I address how it affects my business owner clients. We had plenty of work already in the door for us, for instance, as of March 15th, to keep us busy all the way through the April 15th original filing deadline. And we were deemed essential during COVID-19. And so we continued to work as normal here at the office. We did do a lot more Zoom calls like this than we did, in the past, although we continued to meet with people in person if they would prefer that. Now, the immediate impact of the COVID-19 crisis from a tax perspective, as most people understand, is that the tax deadline for 2019 filings was extended from the normal April 15th to July 15th. Now, certain states took action before the IRS did, and for instance, California had chosen a June 15th extended deadline instead of July 15th. I think they have since coalesced around what the IRS had done with the July 15th deadline. And here in Arizona, specifically, we are on board with the IRS in every capacity as far as the deadlines go. So for all my Arizona clients, their federal and state filing and payment deadlines are now July 15th for 2019 tax returns. Also, in relation to that, estimated payments for 2020, the first of which would have been normally due April 15th, is also due July 15th. And the second quarterly payment, which would normally have been due June 15th, is also due July 15th. So there's a lot of payments due on July 15th, especially for a client taxpayer who owed for last year and needs to pay his or her first or second quarter 2020 estimated payments. There's a lot going to be due on July 15th. So that's one thing that we're doing with our clients, is trying to help them prepare, financially, so that they have the money available to do that if they're not paying it now. You can always pay it now or wait, but we just don't want anybody to get caught unsuspecting, and be behind the 8 ball as far as their payments are due on July 15th. And by the way, this extension not only applies to personal and business income tax returns, but other returns such as not-for-profit organizations. We have a handful of those returns that we do that are normally due May 15th. Those are also due July 15th. So in essence, every deadline has been pushed back to July 15th for any dates that would have been sooner than that. So that's the effect on the tax deadline date. And by the way, there is talk this week about pushing that deadline back even farther.
Oh, wow.
I can say I'm not a fan of that idea. I say let's rip the Band-Aid off and get this over with, instead of keep kicking it down the can down the road, especially because of what I just mentioned, payment due dates. If we keep pushing those payment due dates, people are going to owe a boatload of money all at one time and be very close to next year's filing deadline, assuming next year is April as usual. And so that's a money crunch going on there. And so I'm not a fan of that, but there is talk of extending it to September or even December at this point. But I hope that doesn't go anywhere, in my own opinion. So
yeah. So it sounds like you're encouraging your clients to just, like you said, rip that Band-Aid off and just, I mean, is there any talk of rolling next 2020's tax deadline beyond April 15th?
I haven't heard anything about that, although there's been some scuttlebutt in our community of accountants, about in the past, even before this, about would it be nice to have a June 15th deadline every year instead of April 15th, so it's not crunched into so many months. But my fear is that human nature is that our clients are going to wait till a month or two before the deadline, no matter what deadline it is. So I'd rather just probably keep it the same and extend what we need to extend, and complete those returns after the initial deadline in future years, as we always have. So
yeah, I could guarantee you people are going to procrastinate more. that will not change.
Right.
Ray Charles could tell you that.
That's right.
All right. So, okay. So, it's not just 2019, it's the 2020 impacts of the early payments as a factor that people need to consider. And we'll circle back to that. But how about the impact from the Small Business Administration on the different programs I mentioned earlier?
Sure. So you've got the EIDL, which is a program that's been around before this year. It's been around for a while, but it's become very active because of the COVID-19 crisis. And then based on the new tax law that came out, you have the Paycheck Protection Program, PPP, that is also in play. And I would have to say that's the more popular of the two that most of my business owners are pursuing. Those that are pursuing it, assistance in this area, they're looking for the PPP loan as opposed to the EIDL. Probably the main reason for that is that the PPP loan has the element of forgiveness, that you can get a portion or all of your loan forgiven through that program if you meet the criteria. And that criteria is basically, and by the way, this is open to discussion as well, because Congress and the president have been talking recently about changing the rules for the PPP program, the loan program. But as it currently stands, a recipient of a loan through PPP is required to spend the money that they received through their business within an 8-week period from the date that they received the money. And as it currently stands, 75% of those funds are required to be used for payroll or labor costs in order for the entire amount to potentially be forgiven. Other items that can be used for those funds under the PPP program are a mortgage payment, mortgage interest, for instance, and then also utilities and things of that nature. There's just a small list of other items that the money can be used for. But as I said, right now, as it stands, 75% of what you received needs to be used for labor costs, including your own. If you're a business owner, that can be included in that for that 8-week period. So PPP has certain guidelines and regulations, and then the EIDL has its own set of guidelines and regulations. PPP loan is depending on your submission, your application of what you say your expenses have been, or revenue, and so forth. Recently, it also has a look back period where it looks back to the prior year or prior periods to see, so that you're not jacking up your expenses during the 8-week period from what they would normally be. The whole goal of these loan programs, obviously, from the government perspective, was to have employers keep people on staff during this hard time and continue to pay them and not lose them, because once you've lost an employee, it's a lot harder to get them back for various reasons. The economy, how your business is doing. Also, sometimes you hear stories recently about employees that don't want to come back because they're receiving unemployment benefits, and that's a whole other subject that we should discuss as as a people in the government here, what we're trying to encourage. But EIDL, on the other hand, is, like I said, an ongoing program that's been around for a while. It does have an upfront payment that is available up to $10,000. That is not a loan and does not have to be paid back. That's the intriguing part of that one, the EIDL program. But then the other loan, if you do go forth and get a full loan through EIDL, it's just like a normal loan. There is no forgiveness available. You'll pay it back, and the interest rates are higher. I didn't mention it, but on the PPP loan, the interest rate is 1%, which is not a bad gig for a loan.
Sure.
And so even for those, the portion of your PPP loan that you're not able to have forgiven, you're only paying 1% interest on it. So, and it's paid back, by the way, over a 2-year period. And the first payment's not due until late this year. And so they've set it up so that you don't have to make payments on it until later this year. Interest is accruing, and then you have a 1.5-year payback period at that point for a total of 2 years from the date you got the money. So that's some of the details of those loan programs. And we've been helping our customers, our clients with those. And as you alluded to earlier, that was mid-March when all this broke and these loan programs came out, and it was right in the middle of the throes of tax season. And yet we needed to become experts on that new information right away. So it added a little stress. You mentioned the delayed filing deadlines. That, yeah, we have a mixed feelings about that, but especially with all the other factors going on with these business loan programs, and also with just the stimulus payment that everyone was expecting and is still expecting if they haven't received it yet. We've gotten so many calls of where's my stimulus payment? And unfortunately, with the IRS being down for the count for the last 6 to 8 weeks, their phone lines have been down, their fax lines have been down. Our special phone line that they have for tax professionals has been down that whole time as well. We have no way to contact the IRS other than their website, which if anybody listening has gone on there, sometimes it works for you, sometimes it doesn't. And so that's very frustrating for our clients and for us, because sometimes we just have to raise our hands in the air and say, I'm sorry, I don't know what else to tell you until the IRS comes back online and we can contact them. So
Well, I imagine if they need to get a hold of you, they'll find you.
Oh yeah, they're always finding us. It's just frustrating to us that we can't help them with the problem at hand
Sure.
because we can't contact the IRS.
Yeah,
So
yeah.
we're hoping that changes soon. So that the IRS comes back online someday.
Well, I can imagine you haven't slept much in the last 2.5 months, you or your team. And that's going to probably, I would guess you're gonna remain pretty busy through whatever the deadlines are, and at least through the mid-July piece. And then, of course, that impacts your preparation for that you normally do during that time frame with your clients for the next tax year. But well, Mark, as you look at all this and you wrap your arms around this whole situation with the tax implications, with the government programs, what are some 3 to 4 things you might pass on to our business leaders to consider, to write down as they move forward through this year and into 2020 on all these items?
Okay. So obviously each situation is different with my clients or for our firm for that matter. Some of my clients were dramatically affected by all of this and some not so much. In fact, some companies are thriving in this environment because they were deemed essential and they were able to make hay while the sun shines, but others are deeply impacted because they were shut down by government regulation. For instance, I have a massage therapist who I've had a long time client, and they were shut down. She shut down voluntarily before the government shut down, and then was shut down, by government decree. After that. She's just recently opened back up again, but you can see that there's a wide variety of effects on my clients. And so the only advice I would have, other than allowing us to help resolve any tax questions or accounting questions and issues that we kind of discussed here today, is stay calm. This too shall pass. Be wise with your spending, but also make decisions with an eye for the future, not for just the here and now. And, on that note, for instance, your staff, that's why these loan programs were in place, was to help keep your staff on, there with you so that they are there when you're open and running again. And I've seen several of my clients be successful in doing that. The other thing that we kind of alluded to earlier as well is keeping an eye on your cash flow and making sure you have enough cash, so to speak, to make your payments and be up to date when that July 15th deadline comes around. We don't want to fall into a lull of sleep here, so to speak, because of COVID-19 and forget our deadlines. Now, granted, some of those payments for those that have been affected, dramatically by this will be less than they would have been, or maybe you don't need to make a payment at all for the 2020 estimated tax payments if you've been shut down and there's just no net income there.
Right.
And so that's where we try to help out with our clients, is to determine that, keep them, abreast of what their situation is based on the numbers that they're feeding us from their financials. And like I said, every situation is different. Some, like I said, may not have been affected dramatically by this, and we just want to make sure that they are staying compliant and are ready to stay compliant when the July 15th deadline comes. We're just encouraging them to contact us whenever they have questions, and we can advise them. Like I said, it's been a little frustrating lately because there's certain problems that we can't solve right now. We're at the mercy of when the IRS opens up again. But they will open up again. This too shall pass. All the rhetoric, that you hear, I mean, it's true. We just have to plug along and keep going, and we'll be fine.
All right, Mark. Well, thank you for those insightful comments today, and for your explanation of some of the technical aspects of this that our business leaders are working through. We'll look to revisit with you probably in the fall as we head into the end of this tax year, and we'll see what things look like then. But once again, if you would like to hear from Mark, and you can reach him through his website at Weech Financial, and there's numbers on there to give him a call. And I can assure you he's going to be as calm as he was today every time you go in there with an issue, whether your hair's on fire or not.
Right.
I've always appreciated your calmness and straightforward answers on things. So again, thanks again for being with us. Thank you to our listeners for joining Making the Mark, and be well.
Thank you, Mark.